We are going to dive into more supply and demand training. What we are looking at here is the S&P 500. Now, I know with the 0 days till expiration, a lot of newer traders, because of the low price point on the premiums, are starting to get involved in trade 0 days till expiration. Now, just keep in mind, 0 days to expiration can be a benefit. It can be a pro and it can be a con, right? So the pro is that it's a low barrier of entry. Those contracts are going to be a lot less expensive. Maybe if you have a very small account, you can afford to play a couple of these contracts versus not being able to play at all if they were weeklies. But the con is they are going to fluctuate and move in price a lot faster. You can lose value a lot quicker. So just understand that if you are playing 0 days till expirations on any of the indexes, make sure that you're treating it more as a short-term day trade or a scalp. You don't really want to hold these things longer than a couple of hours. If you can kind of make some money, within the hour, I would definitely recommend to kind of take those profits and then look for another setup or kind of wait till the next day, right? So what we're going to do here is I have my chart set up the same every single day. So pre-market, what I'm going to do is mark out the pre-market highs and lows, which on the S&P 500, if we kind of look here, right? If I kind of scroll back to when we opened today's session here on Monday, if we kind of look at where we opened, we had an initial drop here on the pre-market on SPY. Now you can take this wick here and kind of draw a top line here, but what I would like to see is more price action, right? So I want to see a little bit more price action. I want to see another little top here in the pre-market. So what I have marked out is 410.13. We hit that price at around 4:45 a.m. Pacific Standard Time. This was my high here. I also kind of knew we had this rejection spot here, and then this is our current day at 411.21. I've got our current, as of right now, which is 11:30. I've got our current low of day marked out at 408.11, and I've got our pre-market lows at 408.38. So that's what I'm looking at here. Again, price action is horrible today, right? It's not the best. So I'll be the first to say that if you made money today, congratulations. If you lost money today, don't feel so bad. And if you can't really find your foot and you haven't been able to take a trade, that's okay as well, right? So every day is not going to be perfect. Every day is not going to be a trending day. Every day is not going to be 1,000%, moving day, right? So we have to kind of adapt and adjust. There was really only a couple of trades that we could have taken here. Now, if we really look at what happened right off the open, there was a very, very quick kind of scalp right off the first 5-minute candle. We took out these pre-market highs of 410.13 and we ran up to around 411, right? So what was back at 411? That opening candle's top wick, right? So this is why you kind of need to understand where was the pre-market levels, because we stopped exactly almost to a T where we opened up at and started to fade from, right? So there's not a lot of room in that, maybe about 90-80 cents by the time you got in. Depending on how many contracts you played is going to depend on how much money you made, right? Everyone's account size is different. If you played one contract, maybe you only made 30 or 40 bucks and then you let it kind of come all the way back against you and you lost money. Maybe you have a bigger account and you played 10, 15, 20 contracts and you took an 80-cent move, then that could have been a few $100s, right? So it all comes down to how much size you're taking, right? And essentially that's all trading is. The smaller size you take, obviously, the smaller losses that you're going to generate when you have to take a loss, and the smaller wins, right, when you're going to take a win. If you go bigger size, well, you also have a very, very good chance at losing a ton of money, and especially if you don't know what you're doing and you don't have good discipline and you're not patient and you're emotional, you could definitely go down a very slippery slope and kind of blow up an account or two, right? I've seen it happen. I've talked to many people who've had some success and then they kind of get overconfident and then they start to make irrational trades and over leverage themselves and take too much size and then really kind of give all those profits back. That's what we want to avoid at Evolution Traders. That's what I want to help traders avoid. And you guys can do that if you kind of stay true to yourself, right? Stay true to how much money you actually have. If you have an account size that's $5,000-$10,000, please don't expect to make $100,000 a month, right? Now, have stranger things happened where someone's taken 5,000 to 20,000 or 20,000 to 100,000? Of course, right, guys? But those are not everyday occurrences. Those are not the norm. That's not something that can be obtainable by everyone each and every single day, each and every single month, right? You have to kind of just continue to chip away over time. So even though we're day trading, even though we can make a lot of money very, very quickly, we have to take a long-term kind of investor approach to where we want to be in this market for a long time, right? We don't want to come in here and try to retire tomorrow, because that's going to essentially probably hurt us and blow up our account. We're going to lose a ton of money trying to do that. So if we can stay in this business, right, for years and years to come, and we can continue to chip away, we can make a fantastic living for ourselves. We can definitely make a lot of money for ourselves, and we can definitely get the experience and the screen time to kind of help with that, right? So as we came down here, here's where a lot of traders could have gotten faked out, right? So we came down here to these pre-market lows and we actually broke them. We broke the price of 408.38. Now a lot of people are going to take this initial break because they're overzealous. They're extremely excited. They see something going in their favor and they take that pre-market low break. It goes down about 28 cents, 25 cents. And immediately reverses on them, and then they're in huge drawdown. They don't know what to do, and they take a big loss, right? What you want to do is, when we do break these pre-market lows, you want to kind of, especially when we've already tested to the top side, this would be your second move here. Now, if this was the first move where we kind of lost the pre-market lows on the first move, maybe I would have a little bit more confidence taking that first entry. But again, we've already broken pre-market highs once and put in that first move, right? So if we've already done it this way and now we're coming back down this way, what do you think is going to happen? Do you think we're just going to break the pre-market lows and continue to run all day? Maybe, right? But we've already done it to the top side with no follow through on the first time, right? So let's just kind of wait for this to break down. Let's let it put in a new low at 408.11. Now this becomes our second entry. That is the entry price we would be looking to take would be the 408.11. We get this nice reversal candlestick here with this hammer. This is a bullish hammer here off the lows. What I would be looking at here would be something like this, right? If I was watching this in real time and none of this existed here, what I would be looking at is we broke pre-market lows, we consolidated, we could not hold and put in a new high. We came down, lost the pre-market lows, put in a low, and now we immediately reversed. What I would do in real time if I was watching this, right, is I'd put a trend line here, 408.78. If this candle here can get over 408.78, I'm going to take this long. I'm going to use low of day as my stop. It does break it, stops immediately, and kind of retraces back to the level of entry, and then next thing you know, it explodes. 1, 2, 3 candles to the top side. As soon as we got back over the 20 SMA and closed over, I'm out. I'm not looking for more. Even though if we would have gotten out at 410, it's only realistically about a $1.20 move. That's good enough for a scalper. That's good enough for a day trader. We got to think small. We got to think basis. We got to think consistency. Now, it does go all the way up to a price of around 411.29. Again, some people do hold. A lot of people who do hold through that whole move are generally newer traders, because they're constantly looking for higher highs and lower lows and higher highs, right? They don't understand that it's okay to take that 10% win. It's okay to take a 15% win. Yeah, it doesn't look flashy, right? If you kind of go to my social medias and you go to my Discord, I'm never really posting, extravagant gains where I'm making 150% or 300%. That's not the type of trader that I am. The type of trader that I am is I'm going to take decent size for my account. I'm going to go in 10, 15 contracts. I'm going to look to make 15%. If I can make 15%, 20%, 10%, I'm going to take those profits 9 times out of 10. Now, there is occurrences, maybe 30% of the time, 25% of the time where I'm making 30, 40, 50%. But the percentages goes, the win rate percentage goes down, the bigger of a win rate of the winning percentage that I try to make, right? I can consistently take 15, 20% wins over and over and over each and every single day. But the moment I try to get 50%, 60%, 70%, not saying that they do not happen, but the more I try to look for those trades or hold longer for more gains, generally speaking, it comes back, breaks me even, or I take a loss when I didn't really need to take the loss, right? So I look for taking my size, 10 contracts on average, and I look to make that 15, 20, 22, 23%, and I kind of get the heck out and I try to look at and do it again, right? So that was pretty much the only trade. We have been choppy for the last few hours here. We're losing the 20 SMA as we speak. So what I would be looking for once we do kind of put in the low, put in the high, and then we're kind of just trading in the middle, I've got to break one of them. now, right? So I've got to break one of them. We've already tested the low and we've already tested the high, and price action has not shown that we can continue the trend. So if we can't continue the trend and get over or under, I'm going to have to sit out until we can do one of the other, right? Until we can do one of the other, I'm going to have to sit out and be patient, because the last thing I want to do is start taking shorts here, get stopped out, thinking I'm going long here, get stopped out, go back long here, get stopped out, go short here, and then maybe I get stopped out again. Like, we can't just start chasing price action and chasing candles. We need technical reasons to get in the trade. As of now, the day is going sideways. This is just consolidation before the next move. So realistically, I'm looking for something well below 408 or something well over 411. That's going to give me confidence to want to get in the trade. Now from there, we have to manage and go back to our previous days and kind of see more, bigger levels of supply. But as of now, I'm not too interested in trying to short back down to pre-market lows or trying to take a long back into pre-market highs. It just doesn't make any sense when the last 2 to 3 hours we've been going sideways and getting chopped up. So just kind of think about it. Hope this video helped you guys. Wanted to do some live supply and demand training and kind of go over my thought process in real time. I hope this video helps. I will see you guys on the next video. Again, guys, if you do want to trade, you want to learn, all of the ins and outs, go to Evolution Traders, become a lifetime member. You're going to get access to all of my courses. You're going to get access to myself. I'm a mindset coach, a technical analysis that's my specialty, right? I'm a technical trader, so I have all of the technical knowledge over the past 7.5, 8 years going on to try to help you guys with and help you guys understand. Because the biggest thing is learning technicals, and the second biggest thing is mindset and psychology. I can try to help you with both of them, but you have to have open ears, right? If you are very close-minded and you want to believe that you're always right, then I'm not the person to help you try to learn, right? I want someone who's open. I want someone who is willing to listen and someone who's willing to reason, right? Again, am I saying I'm always right? No. But what I am very, very good at is identifying when I am wrong and just letting it go, right? If we can identify, yes, we are wrong, and we get out of a trade, then we're going to be a lot more mentally clear, right? We're not going to be as stressed. We're not going to be chasing moves. We're not going to be trying to revenge trade and win back losses when we shouldn't, right? We just need to, kind of hang tight, stay extremely patient, breathe, go for a walk, get some exercise, do something else, get away from the charts. I hope that kind of makes sense. I'll see you guys on the next video. Again, make sure to like, comment, subscribe, join the Discord. That link is free to join down below. If you guys want more access to that, like I said, evolutiontraders.com, and I'll catch you guys on next time.